to the greater financial system, because as you already said, what we're seeing with the Bank of England, the gilt market's still having problems over there. Obviously, Bank of Japan is in a tough situation, doing the exact same thing, selling treasuries, buying their currency to prop it back up, the same thing. So let's jump to that. Explain how Japan is basically kind of doing the exact same thing.
For sure. So Japan, since the 80s and 90s, they've historically been one of the worst sovereigns when it comes to fiscal and monetary policy. They have struggled to get inflation. They're a consistently deflationary environment. And really, the yen and Japanese government bonds are the laughing stocks of the world. And what we've seen in Japan has been systematic yield curve control, which is essentially the Bank of Japan becoming the marginal buyer, the buyer of last resort of Japanese government bonds in order to pin yields. Because they've struggled with inflation to such a high degree, their idea is, okay, if we pin yields at a certain level, that'll encourage credit creation and that'll get us some inflation. And unfortunately, that hasn't worked for them for a very long time. But what it has done.
So let's break that down a little bit for everybody listening. So the Bank of Japan, they need money, so they need to borrow it, so they issue bonds. The problem is nobody wants to buy those bonds because they know that the Bank of Japan isn't really able to pay that back. So they have their Bank of Japan, the Central Bank of Japan, buys the debt of the government and funds them with money they're printing on their own, right? The problem is as they continue to print that money on their own, expand the monetary base, when you increase the money supply, the existing money buys less and less goods, which creates inflation, so prices go up. So they're printing the money, buying their own debt, but they have massive inflation. That basically sums it up, right?
That's exactly right. They've engaged in this, what's called debt monetization. So they buy their own government bonds. As a function of it, it floods the system of money. We saw that exact same kind of intervention with FTX and Binance.
Right.
They became the marginal buyer of last resort, and now Japan has done the exact same thing. They've sold record amounts of their foreign exchange reserves, which is largely comprised of U.S. treasuries, which has pushed domestic United States yields higher and higher and higher. And Japan has become the largest marginal buyer, right? So they are the ones when times are tough, when liquidity is drying up. They're the individuals who buy their own Japanese government bonds. And actually, there are several reports out now that are estimating Japan owns the entirety of the off-the-run 10-year Japanese government bonds. So they own 100% of that market. So it's no longer an interest rate that's set by people buying and selling these bonds. It's now owned entirely by Japan. That's something we almost saw with FTX. If that intervention had continued, chances are they'd own the entire FTT market. But eventually somebody swooped in and helped them out and had a liquidity injection. But globally, with Japan, they never have that issue. They can essentially print the difference. If they run out of liquidity to buy these bonds, they can create more of it. And so, whereas with Binance, it was a matter of time. It was a clock that was running down because money can be created out of thin air from these central banks. It's an issue that will persist. Right? Yeah, it's an inflationary issue.
But so the problem, though, is Japan is creating all their own money to buy their own bonds because nobody else wants to buy them. If nobody buys them, the rates of the bonds goes higher, so they're buying them to keep that down. The problem is, as they do that, as I already said, their currency is crashing. So then they're buying their own currency to keep it propped up, just like FTX had to start buying their own token to keep it propped up. So many people were trying to sell it, get rid of the token, the price was going down. So they were buying it, and so Japan is doing the same thing. They're selling whatever they can, U.S. treasuries, to buy their own currency to keep it propped up, just like FTX did. Now, the thing is, though, to your point, is that FTX can't print their own money like Japan can. But that's not actually totally correct, maybe, right? Because they did. They created the FTT token out of thin air. They did.
Well, they did, but they can't print. They can't print something like dollars or fiat, something that's deep in.
Right, but what they can do is they can create their FTT token, and Japan can't create dollars, right? They can just print. They can create yen.
Yeah.
Right. So
yeah, precisely.
so FTX could create as much FTT, potentially create more FTT tokens, but who wants them? Japan can create more yen, but who wants those?
That's right. And now Japan is in a situation where they, exactly like you said, they're now not just buying their treasuries, they're also buying the yen. And as they pin yields on the treasure on these treasury securities from the Japanese government bonds, then the release valve is the yen. So as people see that, whoa, interest rates in Japan are extremely low, they're high in every other country, I'm going to sell the yen. So now Japan has been forced into a situation where they're creating all of this yen, and essentially that gets passed off to the citizens. Now the key difference is FTX, they can create more FTT token, but there isn't necessarily a demand for that. It's not like there is an economy that is operating off of FTT. There is an economy that is operating off of the yen. So there's only so far that FTX can create their own token to solve their troubles. Whereas because the entire country of Japan, anybody who holds Japanese government bonds or yen, they can absorb all that newly printed money. So the Bank of Japan has much more leeway to create money and buy its bonds and buy its currency than Binance.
But the same constraints I believe are still there. It's a bigger constraint, a bigger net, but the same constraint is there because back to kind of we talked about this FTT token only had value because the market prescribed value to it. So same with the yen. To your point, yes, there's more people using it. The market's bigger. More people have assigned value to it. But if it continues to lose value, just like FTT token did, more and more people want to get rid of the yen and go to something else like a dollar. Just like people want to get rid of FTT token and go back to dollars or Bitcoin or whatever it is, people also will want to get out of the yen and go to the dollar or Bitcoin or something like that. So they have more room. The market's bigger. It's been around longer. It's more trusted. But at the end of the day, just like FTT crashing, people want to jump ship. If yen continues to crash against real assets, people will want to jump ship as well because they can't create the dollar.
That's exactly right. So what we saw with FTT and the essential complete loss in confidence and collapse of the currency, that's what we're seeing, but because the market's larger, to a slower degree in countries like Japan. Right? So essentially, the situation that we've just viewed in the last 48 hours is a small sort of ant farm version of what we've been witnessing and will continue to witness in countries like Japan.
Yeah. Now, if we take this bigger, and let's go bigger, we only have a couple minutes left. If we go bigger, so Japan's having the problem. So FTT is a perfect, as you said, ant version of what Japan's doing, what Bank of England's doing, what all these countries are doing, because they can create more of their own currency, but not more dollars. But at the end of the day, the U.S. is also doing the same thing with the dollar. Because again, we don't want dollars, we want goods and services. We want energy, we want food. And so the US can keep printing more dollars, but they can't create more energy or food, which is what we ultimately want. And so if the US does the same thing, it's bigger than Japan, but if they do the same thing, then ultimately, and the dollar continues to fall, because they're going to be printing so much currency, people will just sell the dollar to go into oil, energy, natural gas, Bitcoin, something like that. It's the same thing, just bigger, right?
That's exactly right. Ultimately,